Ladies and gentlemen, good day and welcome to Midwest Limited Q1FY27 earnings conference call hosted by Go India Advisors LLP. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Sana Kapoor from Go India Advisors LLP. Thank you, and over to you.
Thank you, Nisha. Good afternoon, everyone, and welcome to Midwest Limited's earnings call to discuss Q1FY27's performance. The financial results have been uploaded on the exchanges. I hope you have had the opportunity to review the same. We have on the call Mr. Ram Kollareddy, Promoter, Whole-Time Director and CEO, Mrs. Uma Kollareddy, Promoter and Whole-Time Director, and Mr. Dilip Kumar Chalasni, Chief Financial Officer. We must remind you that the discussion on today's call may include certain forward-looking statements and must be therefore viewed in conjunction with the risks that the company faces. May I now request Mr. Ram Kollareddy to take us through the company's business outlook and financial highlights, subsequent to which we will open the floor for Q&A. Thank you, and over to you, sir.
Thank you, Sana. Hi, everyone. Thanks for dialing in the call. I'm happy to share that we have started the year with a strong note in terms of numbers. In terms of growth, revenue, we have a growth of, compared to Q1 last year to this Q1, we have a revenue growth of 35%, EBITDA 25%, and a PAT growth of 27%. We also have to note our major cost factor is coming from diesel, and we have faced a lot of volatility, especially higher prices on diesel for the last quarter compared to the Q1 of previous year. In spite of that, I'm happy that we are posting these numbers, and most of these numbers are coming from the granite. In terms of quartz, we have the production for the last quarter, which is we generated around 5 crores of revenue, and we have stabilized unit. This quarter will be a big jump from that number, and then a month on month or quarter on quarter, it will be increasing until we reach a throughput of 15,000 tons per month eventually, and where we stabilize the plant at the eventual number. And we are in line to reach the target for the year end. The other development I would like to bring is an important MOU signed with Indonesia's state-owned company, Perminas. So Perminas is a state-owned company of Indonesia, which is designated to explore, mine, and value add all the critical minerals in Indonesia, including rare earths. And we have the first private company to have an MOU with them, where we get access to all the resources in the entire country, and our focus being rare earths. We already identified the first 2 projects, which our team will be starting to work on. Now, this MOU will be translated into an agreement to form a JV along with them, and I think you will find developments on that during this quarter, which we'll update you in the next meeting. The other important update I would like to bring during this quarter is for Sri Lanka project, the policy which we're waiting is finalized, ratified, and it is in place. And post that, we have received the necessary communication from the government to complete the data points, wherein we are confirming our production, our investment, and our timelines to them to develop this project. I think that is the final milestone before we receive the eventual license. I think that is also expected during this quarter, which we will. So there was no progress for the last 12 months, and this is the big milestone where there's a progress, and they're ready to start finishing the last leg. So I think we should be looking at developing the project starting sometime next quarter. So these are the important updates. We are in line for our long-term growth, and in fact, we are getting more opportunities that we see. For example, Permanus was not a plan; it happened to happen, and we happened to get the right time. Given where we are, we will be taking all the relevant opportunities where our margin profile is maintained. And our goal is right now we're looking at projects that we take up right now that start delivering numbers and revenues in the next 12 to 18 months. And we are a lot of projects coming up in terms of error, but I think we are looking at early commercial projects as a priority, and that will be our priority. Apart from that, I think the updates on the last quarter are continuing, where we are the second phase plant or the HPQ inclusion all remain in line to what has been discussed. Yeah, so I think that's the update from my side.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants may press star and one on their touchtone telephone to ask a question. Ladies and gentlemen, if you wish to ask a question, you may press star and one on your touchtone telephone. The first question is from the line of Arvind from Equiventure Capital Advisors. Please go ahead.
Hello, sir. Good afternoon. Am I audible?
Yes.
Okay. Sir, I would like to understand, we have a sister concern named Midwest Advanced Materials, right? Hello?
Yes.
So I would like to understand the primary nature of business. So can you elaborate?
So Advanced Material has been into production of permanent magnet. So their business is from oxide to rare earth oxide to permanent magnet. So that's where their focus is.
Okay. Okay. And sir, I would like to understand what was the volume with regards to quartz in this particular quarter, Q1.
Volume approximately 5,000 tons is what we have sold.
Okay. Okay. And by what time, probably by end of Q3, can we expect us to be producing around 15,000 tons, 1,000 tons a month?
Yes. So this quarter we're looking at around 20,000, and the next quarter, but by the end of this quarter we'll be able to touch a run rate of 10,000. So next quarter you can go 10 to 12,000. I think Q4 will be exceeding 15,000. That's the plan.
Okay. Okay. All the very best, sir. Thank you.
Thank you. A reminder to all the participants to press star and one to ask a question. Ladies and gentlemen, if you wish to ask a question, you may press star and one. The next question is from the line of Archit Agarwal from Steptrade Capital. Please go ahead.
Hello.
Yeah, hi.
Yeah. Hi, sir. My question is like, what utilization level do you expect quartz to reach EBITDA breakeven?
So this financial year, I think we are planning a profit, not break even. We'll be making some profit out of the operation. So I think but optimum profitability of optimum EBITDAs we'll be seeing next year. So break even, for your question, break even will be achieved maybe in Q3, and then at the end of the year you will see some profits.
Okay. And my question is, one more question is about the Sri Lanka plant. So when that will start contributing revenue?
Sri Lanka, there is technically a delay of almost 6 months due to the policy. So I think can start internally. The timeline is we can start breaking the ground somewhere in October. So I think from that point of time we should look at 12 to 15 months for the plant build out and start operations.
Okay. Okay, sir. Thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may press star and one. A reminder to all the participants to press star and one on the touchtone telephone to ask a question. Participants who wish to ask a question may press star and one. The next question is from Yash Purbe from Inved Research. Please go ahead.
Yeah, hi. Good afternoon, sir. So my first question is on the recently signed MOU. Sir, can you give more details about it and the timeline that by when can we expect some significant milestone in that?
So the why we are looking at Indonesia interestingly is, I think I'll give you just a brief. In rare earths, there are heavy rare earths and light rare earths. So NdPr, which is neodymium praseodymium, are light rare earths, and the heavy rare earths that we are looking at are dysprosium and terbium. Now, Indian monazite, which is there in Indian states, Indian coastline, has only light rare earths. We don't have the heavy rare earths. Heavy rare earths are only in certain geographic areas which are already mostly contracted or acquired by the Chinese companies. So, which means there are very less territories where we can access to DYTB. And the reason DYTB is important is every powerful magnet which goes to defense, aerospace, or any critical applications need heavy rare earths close to 4 to 5% as a coating or onto the rare earth material, without which you cannot make those products. So for strategic and critical industries, it is essential. And Indonesia has deposits called ionic clays. They are geological deposits, different from monazites, which have the heavy rare earths. So this MOU is giving us access to not only light rare earths, but also heavy rare earths. So the initial deposits being targeted are ionic clays, which are not there in India or many geographies. They are there in Indonesia. So we will be converting the MOU to agreement or this quarter itself most likely, and next quarter we'll be forming a JV. The percentage and the equity share of the JV is yet being discussed. Now, the Terminas will be contributing capital. We will also be contributing capital in the share that the JV is formed, and we will be operating this JV for a long time. Maybe so the activity, they'll be mining lease. Then we will explore. We will be starting to extract the oxides out of it, and that is the scope of this initial JV that we're forming. And this JV is not just one project; can be for multiple projects across the country. But obviously, we'll start with one or two, and then we'll try to increase as we go. There could also all be projects where we are building out and we are still doing exploration. But geologically, it's very interesting. And the light rare earths are expensive, and the heavy rare earths are 4 to 5 times more expensive than light rare earths. So it is strategically important, and also margin profile wise, heavy rare earths are much more attractive in overall scheme of things. So I think once you form the JV, from there you should look at 12 months, 12 to 15 months again to plant build out, and then operate those mines and get into cash flows.
And sir, what kind of return or payback period can we expect from this project?
It's still an initial stage. We cannot, but usually the cost of extraction is very similar to what we get in monazite, but you get added heavy rare earths. So it's a very, so usually heavy rare earth products are significant in terms of margin profile, but the key is there needs to be enough volume, and luckily in Indonesia we're finding enough volume of the clays to build a plant.
And sir, can you put some light on what kind of capex would be needed for this project? And this will be apart from the 300 capex we are already doing in our existing project.
So it will be similar. It will be more because it's an overseas project. Though the project profile is similar, we're taking the difference between Kerala and here is Kerala, the tailings are already ready. Here we'll be mining the clay from the earth and then taking it to the plant. So the capex will be higher, and also overseas project usually capex higher. So I think the capex will be if the first project will be higher than Kerala, but the absolute number I think we'll be able to give you during next call, because we're still doing a lot of work on the project report right now, which will be ready in next 45 to 60 days.
Okay, sir. Thank you. Those were my questions.
Thank you. A reminder to all the participants to press star and 1 to ask a question. Ladies and gentlemen, if you wish to ask a question, you may press star and 1. The next question is on the line of Chirag Gandhi from Astrid Investments. Please go ahead.
Yeah, hi. Can you hear me?
Yes.
Yes, sir.
Yeah. Thank you for the opportunity. Actually, I joined the call a bit late, so I missed out on the opening remarks. I wanted phase 1 plant. Have we already started mining started the commercialization of the plant, and are all the teething issues with this phase 1 project has been behind us? Just wanted to check that.
Yes, we have started the commercial operations. The teething issues are behind us. I think that will be shown in the numbers this quarter. And as indicated earlier, we'll have a month-on-month, quarter-on-quarter growth. We'll be stabilizing by the year end at around 15,000 tons plus above per monthly. And by when we'll not only be breaking even, we'll also be generating some profit by the year end. That is the plan.
Understood. And what would be the update on phase 2 of this plant?
Phase 2, we are already started building out. The only change is some machinery was going to come from China. We're looking at alternate options now. So we will be in line to commission the phase 2 in the next within the next 10 to 12 months.
Understood. And what would be the capex outgo for this year and for the next year as well?
Capex on quartz would be approximately 125 crore.
Okay. This will be entirely for phase 2 of the project, right?
Yes.
But it's split over current year and next year.
Okay. So our total capex outgo will be 125 crore between this and the next year, right? Or it will be a higher number because we have other projects also in the phase of build out, right?
Yeah, this is for quartz.
Okay. And what would be the capex for the Sri Lankan project?
Sri Lankan project for plant building is around 120 crore.
Okay. And the last question is on our granite business. Can you explain us how did the quarter went by and how is the demand shaping up for the rest of the year?
Demand is good. You can see from the numbers, we have 35% top line growth. I think if you remove the quartz part, we are still above 30. So I think the demand wise is good. The pricing wise, we have had a better realization. The attention is on the cost factor. Though we showed growth on all the fronts, the fuel is something which we are working aggressively on. Luckily, if you look at current quarter compared to Q1, the fuel prices have rationalized a bit, but are still far from what they were previous year. We hope that once the volatility set we go back to the previous levels, then all that will directly flow into the numbers without us doing much than what we are doing now. Apart from that, I think from cost factor, the electrification is something we are in line, and we are aggressively pushing that. Most of the electrification expenditure is done this year itself.
Understood. Are we giving any revenue and EBITDA guidance for FY27?
Granite-wise, we will be achieving whatever we have recorded in the last few years. It will be more or less in the same lines, except unless we have this diesel price impact, we'll be like maybe 50 beeps to 100 beeps kind of range. We will be in the same lines as last year's.
So on overall basis, what will be the revenue growth and the EBITDA margin that we are, let's say, guiding for FY27?
FY27 will be close to, we are estimating around 840 crore. Against its past year's number of 645.
Okay. And EBITDA margin will be upward of 26-27% for this year, comfortably?
Yes, it will be in the same range, except the quartz-related weighted average factor, if at all there is a little impact. To that extent, there will be impact on the EBITDA for the current year. Next year, there will be full-fledged volumes coming in from the quartz. I think the EBITDA would be better, but this year there will be little weight factor on that.
Understood. Thank you. Those were my questions. Thanks.
So to add to this, the diesel cost is almost 13% for us as a cost head. So to add to this, the diesel went from 85 rupees to 125, 130 rupees a liter. So you can see a lot of manufacturing industries that are heavily dependent on diesel. Their EBITDA margins were heavily under stress. Ours were down 190 basis points. That's it in this quarter with this kind of impact, diesel cost impact. The reason being that we were very proactive and we got our fleet electrified. And whatever vehicles we are sweating, we electrified that fleet, and then we back integrated with solar. So our OPEX costs are less dependent now on diesel fluctuations. So that's and we are going to continue electrifying the fleet to further reduce the diesel impact. So war, no war, we will not be affected on the granite margins going forward. And we've also increased the prices slightly.
The price hike would be in the range of what? Upward of 5%, or it's like around 3 to 5% in the granite?
Around that range.
Around that range. So we will be able to recoup the margin decline that we witnessed in this quarter by, let's say, 2Q, given we have already seen some rationalization in fuel costs?
Yes, we should be, and also fuel is come down by a certain extent. That is also helping, and the currency also helps. So yes, we will be able to more or less go back to the norm.
Yeah, I mean, another war and another really big hike is really, can't be predicted. But, we are in the journey of electrifying the fleet. So whatever we can reduce the impact considerably compared to, even in the worst quarter, it's down 190 basis points. So you can imagine the minimizing we are doing efforts to minimize.
The biggest lever in this is the volume growth, right? Revenue growth. So if revenue growth is able to absorb most of the other costs, fixed costs, and I think that revenue growth we'll be able to meet, we feel as of now. So I think should not be a big concern right now.
Understood. And really the last question is, what is the average realization we are able to get it in the quartz business?
Around 10,000 per ton, rupees per ton.
Per ton. Yes. Okay, thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may press star and one. A reminder to all the participants to press star and one to ask a question. The next question is from the line of Dipesh J from Manya Finance. Please go ahead.
Yeah. Am I audible?
Yes.
So,
Yeah. Many of my questions have been answered. I just wanted to understand what are the key factors of the Q-on-Q decline in performance. Was it some seasonal impact during the quarter?
Yeah.
I mean, in essence, ideally one compares Q1 of last year, last fiscal, to Q1 of this year. Because usually across the industries, Q4 has the highest peak sales usually. So ideally, instead of comparing Q1 to Q4, if you compare Q1 of this year to Q1 of last year, it's grown by a 35% revenue. Revenue has grown by 35%.
And adding to that, if our specific industry, most of the material is being sold to China and exports are to China. And Chinese New Year is the biggest influencing factor in that timeline. It's like Diwali for them, where they reset all their stock and start buying in bulk, in volume immediately after to stock up for the year. And that typically happens during January, February time. So historically also, our Q4 revenue has ranged between 30 to 38, 40%. I think last year it was 35% of the overall year revenue. So that is also historically constant for us. So this year also, I think it will not be any different.
Right. And how is the phase 2 expansion of Quartz business progressing? And could you provide some details out of that?
Yeah, one second.
Yeah. We have spent around very marginal amount, and we have finalized now the suppliers' orders and all. Q2 and Q3, you will have significant outflow that we have planned for. Out of 125 crore, approximately 60 to 70 crore would be spent in the next 2 quarters. And the remaining amount would be like the fourth quarter or the early quarter of the next financial year.
And by when do you think the segment of Quartz will reach the break-even?
So Quartz break-even, I think we'll be breaking even when we touch a production of 10,000 tons on a monthly basis. I think that is what we'll be doing sometime end of this quarter or next quarter for sure. So 10,000 tons is, but our aspiration is 15,000 tons per month run rate. So I think we'll be ending up making profit this year.
Right. And that would not need the phase 2 expansion also, right? I mean, we'll
No,
be able to reach...
No.
Okay.
In the current plant, we can go up to 18,000. I think 15,000 is optimum average that we're looking at. And then setting that as a base and then going higher than that.
Right. And could you provide any FY27 guidance for production, sales, volumes across the key business segments?
I think we have absolute numbers and not the unit numbers, but we can give you that.
Estimated revenues for FY27 is approximately 840 crore, and out of which 720 will come from granite and 120 will come from quartz. EBITDA levels, granite-wise, will be in line with our EBITDAs of the previous years. And quartz this year would be a little low than expected because it's the first year of stabilization. Then the volumes are also a little low. The absorption cost, the overhead absorption and all are, taking the bite of it. And next financial year, there will be full-fledged contribution coming in from quartz.
Right. And also that would increase the operating margins also when the quartz business will begin?
Yes, absolutely.
Okay. So there will be an improvement on ROE with that?
Yeah. there will be deployment and the revenues will start coming in. And this ROE, current ROEs are basically because we have raised fresh capital and loan that is sitting there. There's no, that's deployment, and the revenues coming out from that deployment should scale up the ROCEs or ROEs.
Okay. What about the overhang of the promoter holding of 77%? Are you planning any fundraise or any? I mean, and is there any other plan wherein this promoter holding will come down to 75%? Because
we have enough time.
Selling from the promoter would actually be seen as negative. That's the reason I'm asking this.
No, we have enough time, and I don't think we're looking at it in near term to get down to 75%.
Yeah, I think 3 years is what we are told, and we are not even done with 1 year.
Yeah.
Right. Thank you so much, guys. All the best.
Thank you.
Thank you. A reminder to all the participants to press star and 1 to ask a question. Ladies and gentlemen, if you wish to ask a question, you may press star and 1 on your touchtone telephone. The next question is from the line of Alok Diora from Motilal Oswal. Please go ahead.
Hi, good afternoon. Just had a couple of questions. So first thing on the revenue guidance which you just gave. Just wanted to understand, like we have already done around 190 crore in 1Q. So even if you just go and extrapolate it for remaining quarters, and assuming second half is better, we should be doing 850 crore or so. Plus, the costs will also be ramping up. So just wanted to understand more on the FY27 revenue guidance. How are we seeing it? Because it seems to be little on the lower side, considering the current run rate, and things will ramp up in the 2H.
Yeah, Alok, we basically, as a company, we want to promise less and over-deliver. So these are considerable estimates. I mean, conservative estimates.
Right. But so if you just on the realistic side, it should be like 200, which we are doing, could kind of continue for the fourth quarter, for the 4 quarters, and slight bump up. And plus, what would be the quartz revenue in this? 120 crore, is it?
So yes, 120 crores for the quartz, and of course, when it gets to optimum level, then the overhead costs will be optimized, and then it'll cross the break-even mark. But then usually the rains are slightly delayed in quarter 3, and usually the the production will be slightly lesser in compared to quarter 1 also. So those factors will play out. But ultimately, this is a conservative estimate from our side.
So whatever number we are doing, we're very confident is what I would say. And if things go as planned like Q1, we should definitely beat that.
Got it. And sorry, I joined call a little late. So the margin profile, which we have been doing over the, if you just remove this quarter, we have been doing 27 to 29% sort of a range on a blended basis. That should kind of continue, or there it should be, or it would be more like on the lower end of that range.
So Q1 we faced all the challenges that we could face, uncertainty, right, sudden spike of fuel, and so I think Q2 is tapering down in terms of uncertainties and on the cost. In terms of realization, we are more or less in line with Q1. So given that, we are more relaxed in Q2. Q3, whether we can expect surprises, we don't know. We are prepared for flooding. We are prepared for rains, much prepared for rains than last quarter. That angle, operational side, we are strong. Any external factors, we don't know. But if things remain as they are, I think we are quite comfortable.
Sure. And just a last question. So, we have seen other companies where, because of the increase in the cost, they have taken some price increases. Have we also taken that selectively in our our segments, or we are still in kind of a wait watch mode, and then we'll take an appropriate call? Because many companies, we have seen basically the cost being passed on to a certain extent. So just wanted thoughts on that.
We already have done price increase. That has helped us. And the second thing which has helped us in maintaining our margins overall is more or less is the volume increase. So I think we are focusing on the volume increase, which is in our control, and delivering good value to the customer right now. And the price has been done. And if further fuel there is uncertainty, we have option to do that again also. But I think for now, for this year, we will be maintaining where we are if the costs are in line to this.
Sure. Just a last question, if I may. So the quartz business in the phase one will be doing this 120 crore revenue this year. So from this phase, what could be the revenue next year, assuming by end of this year it's almost at fully ramped up in terms of the capacity. So what could be the revenue from that in FY28?
Around 180 to 200.
180 to
So
200.
that actually the range once you touch the 15,000 ton mark per month.
Got it. And from the phase two, we'll be getting in FY28 any material contribution?
Phase two, I think we are looking at sometime Q2 next year, right? So yes, next year we'll be getting some numbers. But you need to keep a buffer of quarter for stabilization and streamlining of production. So I think you will get production for about 4 months for the next year is what we should be planning, around 4 months.
Got it. So if we end up doing, say, 840, 850, which you are guiding for FY27, so in that approximately 720 is for the granite. So whatever growth you get on 720 will be there for FY28, and the 120 of quartz will be more like a 180 to 200 in FY28. Is that understanding correct?
Yes. So 180, let's say, from phase one, and some part from phase two. Let's say another 50 or 40, 50. So I think we are targeting 200 plus to definitely for next financial year. That number could be anywhere between 200 to 230 to 40. Let's look at it. I think by end of this year we'll be able to throw more light on more accurate numbers there.
Right. And the 740, 750 could be more like whatever 10-12% growth.
Yes. So if you remember in the last few calls also, we have guided 12% on the granite. So we have beaten that by a good margin. And whether that momentum will continue in terms of order book and production, yes, it is for this year. Next year, let's say we maintain the same 10-12% as a conservative estimate.
Got it. And margins, when you say plus the quartz will stabilize, so the margins will start inching up. So FY28, if we are doing 180 crore, which is almost the peak revenue which we could get from the phase one. So what could be the blended margin looking like? I mean, would it be more like inching towards the 30% mark, or it would still be slightly lower than that number? Because quartz is expected to have a much higher margin profile as compared to the granite business.
Yeah. Quartz, there will be a little better contribution in the next financial year because the number which is coming from quartz would be a little higher. In terms of EBITDA. EBITDAs would be close to 30, little about 30%. And overall blended EBITDA might be around 29-30%.
Got it. Yeah, fine. I think, that's all from my side. Thank you and all the best.
Yeah, thanks a lot.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may press star and 1 on your touchtone telephone. A reminder to all the participants to press star and 1 to ask a question. The next question is from the line of Archit Agarwal from StepTrade Capital. Please go ahead.
Hello.
Yes, sir, you're audible.
Yes. Yes, sir. So my question is, in the previous con call, you had guided for 150,000 tons of quartz production in FY27. However, Q1 FY27 sales is around 5,000 tons only. So, is it still achievable, 150,000 tons, or what are the challenges, like it's a production side or demand side?
So first, the challenges on the production, we have been facing some challenges last quarter to streamline the production. It's a technical issue. That technical issue is sorted. We will not be able to do, we are not doing 150,000 tons. We'll be doing around 120,000. So that is the effect of that. And all the guidance and numbers that we have just discussed till now is based on 120,000 tons.
Okay. And what will be the mix of engineered stone and solar in this quarter?
Engineered stone and solar. Yeah. Around 60 to 65% engineered stone, balance solar. I think 65-35 is a reasonable assumption.
65 to 30?
65% engineered stone, 35% solar.
Okay. And are we when the phase 2 cards commencement will be done? It will be in Q4 FY27. Is there any deviation? Phase 2 cards.
Phase 2 quartz?
Yes.
Phase 2 quartz we just will take another 10 months to next year we'll be commissioning the plant. So I think you'll see the numbers only coming in from next year. We were also waiting a bit to stabilize this plant. So now that is done. So we are going ahead, and I think next year, whether it's 10 or 12 months, we'll commission the plant. As discussed on the call previously, we'll see some revenue from that next year.
Okay. Okay. Thanks.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may press star and 1. A reminder to all the participants to press star and 1 to ask a question. The next question is from the line of Manish Gupta from Equinox Investment Advisors. Please go ahead.
Yeah, good afternoon. I'm sorry I joined the call a little late. Could you talk a little about your Kerala JV with the Kerala government?
Yeah. So post the last development, there is no development this quarter, primarily because there is a new government there and they're just settling down. In fact, there is no new MD also for KMML appointed yet. So there are some bureaucracy and internal issues in deploying some officers. So KMML, there is no activity post that. We are hoping that once the new MD and the new team comes in place, we will start progressing that and in continuation to that. Now, a timeline on that, we frankly cannot estimate because government thing. But one thing I would like to highlight here, the current administration is pro-development and they are concerned about commercial activities in the state and increasing the state revenue. So I think once the team is set, we believe that things will move faster. But until I think we'll have to wait a bit. Hopefully this quarter that team should be there and we should see some activity from next quarter onwards.
Yeah, fully understand that. And regarding Sri Lanka policy logjam, do you have any visibility when you think it should get settled?
Yes, so there is a development this quarter which I updated. The policies, we were waiting for the policy. The policy is done, streamlined, ratified. All the boxes have been checked from policy. And also, after we have received a formal communication to reconfirm our capacities, timelines, and investment into the country. So that is being done as we speak. And then I think that was the last milestone. So from their side, they have done. From our side, we are presenting all that information and presenting project report, final project report. I think once that is there, we expect the documentation to be done sometime this quarter itself, and we can start developing the project from next quarter onwards. So I think we are at the final stage. What we have been waiting for long is panning out now, this quarter.
That's great to hear. Great to hear. Regarding CapEx, so correct me if I'm wrong, we have almost about 800-900 crore of CapEx planned. You said 125 crore for Sri Lanka, 150 crore for ports. Kerala, again, I think 300 crore, in Indonesia, a little more than Kerala. So what are the plans for CapEx funding? Is it going to be more debt-oriented, or you are planning to raise some equity also?
Yeah. If you look at Kerala is basically pilot plant unless we get into a kind of a commercial plant arrangement with the new government. It's basically pilot plant which will not cost much. It's a insignificant cost. As far as phase 2 is concerned, it is a fresh equity that we have raised. It's not a capex. We just need to spend as per the timeline. And other capex that we have as of now, so it's no regular replacements as far as granite is concerned. That's no being met year on year from its regular cash flows. Sri Lanka is, that comes in, then we will be in a position to spend 120-150 crore from internal accruals. Our gearing ratio today is at 0.2 times. Okay. We have leverage on that front.
All right. And so finally, of all the diversifications that the company is doing, Sri Lanka is there, or Kerala is there, or ports is there, and then now Indonesia, MOU is there. Which one, excites you more to become, a meaningful contributor behind Granite in times to come?
So if you look at all these projects independently, they are meaningful contributors. Now, what do you mean a meaningful contributor? If today we are generating about 700 crores odd or 800 crores in natural stone, something which is at least 50% of that size is meaningful, right? So Kerala, once Kerala commercial it happens, it ticks that box. The Sri Lanka ticks that box. Indonesia could be much bigger. Two initial times to talk about it. So I think all these are significant contributors. Now we'll have to see, and we are working in parallel because as you have seen, the timelines when we're working with government agencies initially may be slow, but once you get all the permitting in line, it's in our control, right? So we're geared up for that. We have the team, infrastructure all together we can execute once we have all the ground clearance available to us. So I think we will take all the opportunities, whatever is mentioned in parallel. We have independent teams, and each one is significant. Ideally, we want to see all of them come into translated numbers in the next 18 months' time. So that is the whole idea that we are working on.
Got it. Thank you, and all the best.
Thank you. A reminder to all the participants to press star and 1 to ask a question. The next question is from the line of Pratik Singh from IIFL Capital. Please go ahead.
Hi, thanks for the opportunity and good afternoon, Ram and Dilipji. So I want to understand, maybe I missed it in the opening remarks, what was the year-on-year growth in absolute black and Black Galaxy in this quarter in terms of by percentage terms? Have you given it earlier?
So I think overall granite growth we have seen upward of that 32-33%. Now within that segmentation, Black and Galaxy, do we have the data?
Volume growth.
Black Galaxy. Hello?
Yeah, I was asking about the volume growth, sir. Volume growth.
Volume growth, approximately 10%.
Okay, 10% in both of them, right?
10% in volume. Yeah, in both the products.
Okay. And just if you can remind me, you had a revenue share in 2 mines. That mine, the revenue share with the AP government, that is Black Galaxy, right? Or is that the Black one?
Yeah, Black Galaxy.
Black Galaxy.
It's not revenue sharing, actually. There's a some kind of a consideration that we are paying to the lessor. That's a state-owned body, and they have a percentage of shareholding.
Understood. The last question was largely on this Indonesia JV. So as of now, I mean, I assume it would be in pretty early stages, but as of now, have you decided in what share would Midwest Limited, Midwest Gold or Energy and NFPDC share the CapEx?
So right now, the structure that is evolving is different. There'll be two. What we're discussing is there'll be two JVs, and the first JV is from mine to oxide, where Midwest Limited will contribute. The second JV is from oxide to magnet, which Energy is going to contribute. So right now it'll be one JV, which will be with Padminas, where we start off, because without the oxide, there is no meaning in producing the magnet, right? So I think there is a timeline difference also. We are starting off the first JV now. I think the other JV with Energy, they are looking at sometime later. But our focus is we are good to go as of now, and our product will be oxides. So rare earth oxides, which are the ones mentioned, heavy and light rare earths. NFPDC is technology partner. They will not be equity partners, nor they'll be contributing in terms of the capital. So the capital raise on this specific JV will be between Padminas and Midwest Limited.
Understood. And which of these streams is a bit more capex intensive, the ore to oxide part or the oxide to battery part?
Oxide to magnet part is more capital intensive, and ore to oxide is less capital intensive. Okay,
so whatever oxide to magnet part work would be done, that would be contributed largely by Energy.
Yes.
Understood. And just one more question, if I can squeeze in. I understand that the bulk of your exports go to China. Have we seen any rise in freight costs due to the West Asia war? And if yes, are we able to pass it on to our customers?
So usually most of our shipments are FOB basis. So freight is always to the customer historically. There are some instances where we do CIF also, where even if that freight we pass on to the customer. So we usually, even our costing, we don't take it in a costing also. So it's always customer scope, direct or indirectly.
Wonderful. Thanks a lot, and all the best.
Thank you. The next question is from the line of Bala Murali from Oman Investment Advisors. Please go ahead.
Hi, good evening. So what is the contribution from this silicon segment in this quarter? What segment?
Pardon, can you repeat the question?
Oh, what is the contribution of revenue in this quarter from the power segment?
Yeah. Approximately 5 crore.
Okay. So, quad phase 2 we can expect in FY28. So, you think you have update on Sri Lanka HNS. So, how will this revenue shape up in the FY28 from this HNS? And can we assume that it would be at peak level, or it can still the peak can be hit in FY29?
FY27, we said that the number would be somewhere around 840 crore. FY28, there will be full-fledged revenue which is coming in from Quad Phase 1. That would be approximately 200 crore, 180 to 200. And there might be a little revenue which is coming from the Phase 2 also. That number we are at to estimate. Probably by end of this year, we will be in a position to estimate this better. And with that and the normal 10% to 12% growth, even the conservative side if we take for the granite segment, it will be close to 950 crores kind of revenue.
Yeah, thanks for that. So, I'm supposed to ask regarding HMS only, the Sri Lanka business. So how it will shape up in the FY 27, 28, 29. So whether we can achieve this peak potential in FY 28 or maybe we can get some optimum level in FY 28 and will go to FY 29 also.
Sri Lanka, this is in the licensing stage, and the licenses have to be granted, and we have to build out, the plant has to be built, and then the cash flows will start. And we are estimating this in FY 29, not in FY 28.
Okay. So, this, I think this Indonesia part, so we partnered with some local government agency and also our the promoter entity, one more listed entity. So how do you, what is the visibility over there? So when do you think things get realized and we can have some revenue contribution from there?
So that will also be in line with Sri Lanka. I think FY 29 we should factor seeing some numbers. Anything progressing faster, we'll update you. But right now we are conservative and very initial stages, so I don't think it's right to put timeline and numbers. It can be faster, it can be longer. I think next call we'll give a more detailed update.
Yes. Some small follow-up on that similar one. So another promoter entity, so she is also partnered in this business. So is it, do you think that we can merge that entity into the listed entity so that it can be a subsidiary or at arm's length rather than a separate entity?
No. So the MOU was signed because the Indonesian government was interested in producing magnets also in the country. And the scope of our business is different from the scope of Midwest Energy. As I just indicated in the previous the earlier statement, we are forming first a JV between Midwest Limited and Perminas, Indonesian company, where the scope is taking from mine to oxide. That is the scope of Midwest Limited. The MOU also clearly says that. Later, another JV will be formed by Midwest Energy and Indonesian entity to take that oxide into magnets. So right now, all the activity, all the focus will be to first produce oxides, and then they will do a JV for the magnet. So there is no JV level partnership between these two companies. So there is no question of arm's length coming there. And the capital raised will be between Midwest Limited and Perminas, the Indonesian government.
Yeah, understood. So, and in India, rare magnet front, so we also want to be part of this government initiative. So, where are we in terms of that, when we can see something outcome from that rare magnets front in India?
Are you talking about the PLI scheme of Government of India?
Yeah, the PLI scheme came from the government of India, but we should want, we have thoughts to participate somewhere in that entire overall cycle, either from over to oxide or oxide to magnet or something.
Yeah, so right now we are focused on production of oxides. That is our focus, and that will be our focus for the next 2 years. And once we do this in volume, then we look at further validation if required. But right now, I think we're very busy, and all these projects are taken up in order to produce from mine to oxide or ore to oxide. That will be our focus. And there we are right now from government point of view. There is in terms of opportunities or in terms of subsidies, nothing much, and also the projects can be easily capitalized. And the margin profile is good, so I don't think we are waiting for any subsidies from government for these projects.
Yeah, but I think earlier we discussed that they will select some 6 entities for this magnet production. So, do you think we will participate in that somewhere in that cycle, or another promoter entity could take part on that one?
No, we are not looking at any magnet production as of now. All those schemes are for magnet production.
Okay, understood. Thank you.
Thank you. The last question is from the line of Gursharan from GMA Advisors. Please go ahead.
Any update on the activity of our subsidiary in Sierra Leone?
No. So we have done, we had to form a company to do some local works there and do some due diligence and apply for some licenses. So this quarter there is no update, and we have looked at a couple of concessions which had local issues. So we are still actively looking for there. There is no minimum or no expenditure right now on that front also. It is just the logistics of our team going there and looking at them. So I think if there is an update, we'll update you next quarter, but this quarter, no update.
Okay, thank you.
Thank you. That was the last question for the day. I would now like to hand the conference over to the management for the closing comments.
Thank you everyone for joining the call and asking all the relevant questions. And look forward to the next call.
Thank you, everyone.
On behalf of Go India Advisors LLP, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.